What's up, everybody? This is Steve from Altcoin Buzz coming at you with another episode. So in this episode, I wanted to talk about the speculation that there's going to be this big cryptocurrency bubble. Just like the housing economy in the late 2000s, 10 years before that with the dot-com bubble. A lot of this, to some investors, reeks a lot the same like the dot-com bubble did in the late 1990s. So if you remember that, the internet was just then becoming commercialized. People were getting internet at their homes, and a few key retailers were starting to emerge that were making some big buzz, like Amazon.com, eBay. So everyone seemed to jump on board. AOL, Yahoo, those are some of the big search engines at the time, and people were still typically using dial-up. But we think about all of the problems that came in with the dot-com era, and then maybe how those have similarities with what's going on in the cryptocurrency space. So, just think about how many businesses got venture capital during the mid to late 90s. Basically, if you could secure yourself a noteworthy or memorable .com name, such as the infamous pets.com, that was ahead of its time probably, because PetSmart and Petco seem to be doing some internet commerce these days, albeit nearly 20 years later. But pets.com, that's a really good name. So, what's in a name? It got a lot of investors to throw in a lot of money. They were all speculating that this was going to revolutionize the purchase of dog foods, dog collars, dog beds, cat food, pets, so on and so forth, you name it. If you were going to sell pet food, how could you have a better domain than that? So there was a lot of hype built into what that business could be. But the reality of it is that the investors were putting too much money into that market to justify the financial returns that these new fledgling businesses were actually going to deliver. So they were not able to produce a profit for the most part. Not in the sense of like Amazon not producing a profit. That company basically hasn't produced a profit its entire run, but that's because that company chooses to reinvest its capital gains year over year into growth. Not necessarily a business that's just losing money hand over fist. So those businesses back in the 1990s hadn't yet figured out the strategy for delivering their products, or marketing their products for that matter, right? The consumers just really weren't prepared to do that. And without search engines that were really efficient, Google wasn't around until the late 90s. And even then, it still wasn't a mainstream adoption. That was the early 2000s when Google took off. It still had a lot of competition with Lycos and AltaVista. So people weren't able to find new emerging businesses on the internet, and they really just had to go off of brand name familiarity. That's where these key .com names came in. Oh, people remember pets.com, or all these then weird words. Yahoo was a weird word. Lycos was a weird word, and they all had gimmicky commercials. But let's dive into kind of a little bit on the causes of the dot-com bubble, and let's decide for yourself if you think that we're set up for failure. Because one, it's possible. Two, I personally don't feel like we're in that position because we're not really necessarily investing into shares in a business per se, like we would if we were buying a stock or a security. We're not expecting that business to actually produce a profit necessarily to give us dividends and to back the investment that we're giving them. We're actually purchasing a commodity, an intangible token that we can exchange as a store of value between each other. So the dot-com bubble had a lot of venture capitalism going into it. It caused a lot of businesses to grow very fast, and for the most part, I don't know the percentage rate, but most businesses just failed. They ran out of that venture capital before they were able to turn a profit. All the money that was thrown into the market in the hopes that these businesses were going to become these big empires from the tech industry was just poof, up in smoke. So people lost money virtually overnight. The stock values of a lot of these companies also skyrocketed overnight. So think back to what's going on right now in the cryptocurrency space, where certain currencies are jumping 10, 20, more than 20% in some cases on a daily basis. And then what happens? People sell their tokens, sell their coins, and then there's a drop, because law of supply and demand says that if more people are selling their tokens than buying tokens, then the price is going to go down. That's why when the prices get high, they're fueled into that high position by people eager to purchase the tokens. So the amount of tokens that are currently for sale is smaller than the demand of people who want to buy the tokens, therefore driving up the price. And the inverse happens when those people want to take a profit and sell those coins. So buying your coin at $9,000 and selling at $11,000 to take the 20+% gains in a week is not crazy, right? The big question is are people panic selling, or are people selling to take a profit? So there's a big difference there, and what we're seeing, especially with the quick rebounds on a lot of these coins, is that people aren't panic selling. The immature investors are panic selling when they see the smart selling, the profit selling, but what they should be doing, as we've given advice many times, is they should be stocking up. Those are periods in which when people are smart selling and taking profit to reduce the coin, those are times when you want to actually invest more money. So let's take a look and see if there's any other outlying causes. So here's some speculation where people are trying to show a similarity between what's called a z-score. Z-score is it's like in an algorithm. The z is the variance from your long-term average, your long-term average value. So if we take a look at this graph here, we're showing the yellow is the S&P 500, one of the key indexes in the stock market. Orangish is NASDAQ. This orangish red is housing prices, and dark blue is the Bitcoin values, singularly Bitcoin, not the crypto space. But as we know, Bitcoin has that 55-56% market dominance, so it's the leading coin here. But let's take a look at the trends. So here at this peak, the first peak on the left, is when the dot-com bubble bursts. So in came all this money from, if we look at 97 to probably about 2000, the value of the stock market just boomed, NASDAQ and the S&P 500. So the prices were going up a lot quicker than their long-term average. And then the market fell, and you can see that really since then, that market hasn't deviated too far from its long-term averages. But I would start to question, actually, on a score rating, we're actually getting pretty close to a 2 again here for a z-score rating. And that would make you wonder, S&P, housing market, housing market's not getting dangerous, but the S&P and the NASDAQ here are nearing those bubble bursts. So, what do we really have to worry about? An economic collapse? Do we have to worry about, is it the stock market that has a problem, or is it Bitcoin that has a problem, or cryptocurrencies? The housing bubble was an anomaly, right? We weren't necessarily in a strong stock market. It was flat during those Bush administration years. So it was really bred off of bad lending habits, right? We were educating the housing buyer in the wrong way, and then they were lending money knowingly to people who didn't have the financial security and stability to back the purchase price, because the banks assumed that the value would always go up. So why not lend the house to somebody, get the sale, maybe they'd keep paying you, and then if not, you'd be able, if they defaulted on it, you'd get the house back, you'd sell it to somebody else later at a higher value, and you own that asset as a bank. It seemed like a smart strategy. That kind of strategy is also being used right now with Bitcoin too. So take that to heart. People are like Salt are coming out and they're trying to lend you fiat in exchange for your Bitcoin or your other coin as collateral, with the speculation that Bitcoin is never going to lose its value. And they're really taking a risk there. In doing that, they might be right though, and that's for you to decide. But let's take a look at this Bitcoin Z value, which is definitely above 6, 3 times higher than the dot-com bubble, 3 times higher than the housing bubble. And just kind of think to yourself, are we in a subprime crisis like the housing market? No, because we're not lending an asset to people who can't afford it. So it's not like you have to pay something back for your cryptocurrencies. So I think we're safe to say on that one, we really need to compare it more to the dot-com bubble. And I think with the z-scores rising in both sections, that maybe investors are actually looking to get out of their positions in their stocks and put them into cryptocurrencies, which is why we're seeing such an increase in market capital coming in the last few months. Maybe people are switching to this as a better security for their investment. The fact that you're not buying a stake in a company that's going to pay you dividends, in most cases, I know there's some coins that are, really means that you don't have to rely on the company to be profitable. You just want to make sure that the product or service that they provide is tangible and valid, so that way you can redeem that coin as a medium. If you're not just a speculative investor, maybe you're just a day trader that's looking to swap the coins, and a lot of these coins don't even have products yet. So we're kind of investing, especially with an ICO, in these businesses before they get a viable business model. The fact that most of them don't have viable business models yet is probably why we're seeing such low prices for most of these tokens and coins. But drop in the comments some of your thoughts on how this might relate to the .com bubble burst. What are some similarities that you see on that? And also, just more importantly, if you've got confidence in the cryptocurrency sphere like we do, what gives you that conviction? What makes it different in your eyes versus these naysayers, the quote unquote older people who've been there before, and they're trying to push their experience onto us as if somehow we're in the same space, and they're trying to blow the whistle and tell us the sky is falling, when in reality, maybe we're so deep into it we just can't see it. But it's a sea of green. It may not always be that way for every single coin. Some will come and go, certainly, or rebrand over time, but there's really no reason to believe that we've seen the top of the bubble, or that maybe there even is a bubble. I mean, does the US dollar, does the euro, do those have bubbles? And this is kind of like a similarity, more so to currency than it is to stocks. So this is Steve signing off from Altcoin Buzz. Go ahead and hit the subscribe button if this is your first time joining us. If you've already subscribed to us and you haven't hit the bell so you can get alerts on every one of our new videos. Drop comments below. Be sure to give me a like or a dislike, and let's keep it real.